Welcome to The Explainer. So today we're diving into something huge, a clash of titans. We're talking Amazon and Apple, and they're two completely different master plans for the future. One is building this invisible automated empire, and the other is building the world's most exclusive, valuable club.
All right, so here's how we're going to break this down. Think of it like a strategic duel. First up, we'll pit Amazon's robot revolution against Apple's walled garden. Then we'll watch them face off in the battle for AI. After that, we'll look at the big risks that could totally derail their plans. And finally, we'll tackle the big one. Who is actually set up to win the future? So back in early 2026, both companies pretty much laid all their cards on the table and they revealed their big game plans. And as you're about to see, the market had some very strong and very different opinions.
And this chart right here, it basically says it all. After their big announcements, Amazon's stock just skyrocketed, up a staggering 7%. I mean, investors were obviously thrilled with their plans for insane efficiency. Apple, on the other hand, got a much smaller 2% bump. You know, it's a sign that they're solid, they're resilient, but it's not that explosive growth that really gets Wall Street's heart pounding. This difference is really what sets the stage for our whole story.
Okay, let's kick things off with Amazon. They have placed a massive bet on automation and robotics. And let me tell you, it is paying off on a scale that is kind of hard to wrap your head around.
Yeah, you heard that right. Over 1 million robots. This isn't science fiction. They've literally built a robot army. They're transforming their entire logistics network from a system run by people into this futuristic, hyper-efficient machine.
And look, these are not just simple little bots scooting around with boxes. We're talking about a whole family of specialized machines. You've got Sequoia, which gets stuff on shelves 75% faster. And then you've got these humanoid robots like Digit that can handle all sorts of weirdly shaped items, tasks that used to absolutely need a person. It's a complete robotic workforce.
So you've got all this incredible, futuristic tech. But what does it actually mean for the bottom line? Well, it boils down to this. For every single package that goes through one of these automated warehouses, Amazon saves about 30 cents. Now, that might not sound like a lot, right? But when you're shipping billions and billions of packages a year, well, you do the math. That adds up to billions in savings.
And that question, man, it leads us perfectly to Apple, which is playing a completely different game.
See, Apple isn't trying to build the world's most efficient factory. Nope. Their whole focus is on building an ecosystem, a walled garden that's so good, so seamless that once you're in, you have absolutely no reason to ever leave.
But even the strongest fortresses have weak points. And right now for Apple, a major one is China. Take a look at this. It's a critical market for them, and their iPhone sales actually dropped 8%. Meanwhile, their local rival Huawei, a company a lot of people had written off, came roaring back with 12% growth. That is a serious headwind for Apple.
But this is where you see Apple's genius move, their secret weapon. Even when hardware sales are under pressure, look at that highlighted slice of the pie, services. It hit a record $30 billion in revenue, growing at 16%. This is their super profitable engine, things like the App Store, Apple Music, iCloud, and it protects their profits even when iPhone sales take a little dip.
So to keep investors happy during these kinds of challenges, Apple pulls out this powerful financial tool. And honestly, the pizza analogy here is perfect. They take their massive profits, they buy back their own stock from the market, and just like taking a few slices of pizza off the counter, it makes every single remaining slice more valuable for everyone who still owns one.
And we are not talking about chump change here. They just announced a $90 billion buyback program. That is a massive signal to the market that they are supremely confident in their own long-term value.
So, okay, you've got robots on one side, die-hard customers on the other. But what's the new battleground? What's the invisible engine that's really powering both of these companies? That brings us to the most important fight of all, the race for supremacy in artificial intelligence.
For both of these companies, AI isn't just some new feature or a buzzword, it's everything. It is the absolute core of their entire future strategy. But true to form, they are coming at it from completely opposite ends of the spectrum.
Think of it like this. Amazon, through its cloud service AWS, wants to build the giant power plant for AI that everybody else plugs into. They're the factory. Apple, on the other hand, wants to put a super powerful, super private AI right there in your pocket, running on your device just for you.
And a huge piece of this puzzle? They're both making their own custom chips to get an edge. Amazon has its Trainium chips, designed to make training huge AI models in the cloud cheaper and faster for their customers. And Apple has its neural engine, designed specifically to run AI tasks on your iPhone with incredible speed, all while keeping your data private.
So, despite all these incredible strengths and these really clear strategies, let's be real. No matter how big you get, nobody is invincible. Both of these giants are facing some pretty serious headwinds that could throw a real wrench in their plans.
For Amazon, the biggest risk really comes down to the price tag on their ambition. We're talking a planned $150 billion investment in AI infrastructure. I mean, that could strain the cash flow of any company, even one as big as Amazon. For Apple, the risks look a little different, but they're just as serious. They are deeply, deeply reliant on the tricky geopolitical situation in China, both for making their products and for selling them. On top of that, they're facing rising component costs, like a potential 40 to 50% jump in memory prices, which could really squeeze their profits.
So, after we lay it all out, what are we left with? We've got two very clear, very different visions for where technology is headed. It really all boils down to this: the factory versus the interface. And this quote, I think, just nails the current feeling on Wall Street. Investors are loving Amazon's proven, tangible results in efficiency right now. They're betting on it hard. But at the same time, nobody is foolish enough to count out Apple's legendary ability to weather any storm and just keep printing money.
So if you're going to take away one thing, it's this. Amazon is trying to win by building the engine room of the future. All the invisible, efficient stuff that just makes everything else run. Apple, on the other hand, is trying to win by perfecting the cockpit, the beautiful, personal, private interface that we all use to experience that world.
And that leaves us with the big question, right? The trillion-dollar question. In the long run, what's going to be more valuable? The powerful, invisible factory that runs our world behind the scenes? Or the elegant personal interface that actually defines our experience inside of it? The answer to that is probably going to shape the next decade of tech.